Okay, everybody, it's me, Gregory Mannarino. This is my post-market wrap-up on this absolutely freak show of a day. And I mean a freak show of the highest order. Okay, so let's talk about this thing that is going on right now. All right, so just looking at the markets. Did you see what happened today? Right out of the gate, bam, stocks higher across the board, looking beautiful. Everything is just on target. All of a sudden, two things happened. First, we heard from Fed President Mary Daly, who really doesn't know if it wants to be a man or a woman. Just go to your search engine and look for a picture of this thing. All right. Again, very confused, doesn't know who it wants to be. Maybe flips a coin in the morning. I have no idea. But this Fed president comes out and says, well, let me get this right. I actually wrote it down. So President Daly, she spooked the market, calling for aggressive rate hikes moving forward to combat surging inflation. All right, market didn't like hearing that. Started to kind of give back a little bit. Then, coming right up the rear end, oh yeah, Fed chairman himself, freaking dirty, disgusting, vomitous, pathetic, hideous, ugly, whatever it is, Yellowstone Powell, talking about a 50 basis point hike next month. Well, the market didn't like that either. So the tag team from the confused one doesn't know whether he or she wants to be an it or whatever it is. And then this other thing, definitely hit the market. Stocks reversed, fall lower across the board, especially tech, which is rate sensitive. Okay, we all know that. But here's the truth. You and I, we just spoke about this right here on this video blog. I said, we're going to get a 50 basis point hike next Fed meeting. Okay. The market already knows that. But you see, this market here, because it's just some kind of freaky, who knows what, always overreacts. So today, on hearing that come out of the mouth of the supreme thing out of the Fed, Yellowstone Powell, market sold off. Energy got hit pretty good. Financials got hit pretty good. Tech got hit pretty good. Even gold and silver. Silver reversed, down 2%. Bitcoin gave a little back too, still over 41,000. 10-year yield remaining relatively stable. Dollar got stronger. Okay, stocks sold off today. But, the astonishing thing to me is clearly this market has been pricing in rate hikes. Okay, inflation is surging, whatever. So this is kind of, to me, seemed kind of a little bit of a shocker that because it came out of the mouth of it, the supreme it, the market did sell off. Whatever. Really, honestly, what the freak ever. We'll see how this plays out moving forward. There is nothing going on here. Are you seeing any crazy action in the debt market? No. Anything you wouldn't have expected after hearing something like this because of the relative strength of the dollar jumping today? No. We're talking about 0.25%. Okay. In relative terms, that's actually kind of a substantial move. Whatever. Okay. You know that the relative strength of the dollar is going to remain high. But that doesn't mean its absolute strength isn't cratering, people. The dollar still remains the prettiest belle at the ball. So that's why you're seeing what you are seeing here. But look, I don't care, and neither should you. We're not going to deviate. We're going to continue doing exactly what we are doing, and that's it. So just understand that. But you have to admit, quite a freak show. All right, look. So with that said, I want to bring something else to your attention. I was writing some stuff down as usual here. So let's back up a minute to last month. Last month, we found out that Congress approved, let me get these numbers correct, Congress approved a $13.6 billion aid package for support of the war, Ukraine, Russia. Well, okay, what our president is doing is sneaking in another couple of $1 billion. Today, another 1.3 billion, which just followed up an 800 million. So this is now at 15 billion. Can I see your shocked face? People, they're going to keep throwing money at the war. It's designed to do that. It's going to be prolonged, and they're going to come up with any excuse imaginable to continue to fund it. Just like now you got Jamie Dimon, CEO of JP Morgan, saying that we urgently need, it's urgent, it has to be done now, 1.3 trillion. Where did he come up with that number? I don't know. $1.3 trillion to fund the energy crisis. It's astonishing to me, people, but not really, because you understand how this works. They're going to create a crisis, and then another crisis, and then another crisis straight up the middle, so they can continue to pull cash out of the future and fund it. That's what this is all about. On top of an entire $1 trillion that is waiting, is just sitting there, that is already allocated to fight COVID. Yes. It's already gone, and there's nothing you can do about it. It's going to be spent. It's all a mechanism, people. Just look around you and understand what's going on. And I'll tell you something else that's really just kind of stupid. And again, with all the bullshit that we're seeing here with Fed rate hikes and stuff, we're nowhere near the Federal Reserve coming close to doing a damn thing at all about surging inflation. In fact, like I said yesterday, they're guaranteeing that inflation is going to skyrocket higher from here. I just finished doing an interview with Gerald Celente, one of my greatest friends. Love the guy. He's amazing. I think you all know that. And if you don't subscribe to the Trends Journal, for which I am a contributor, I write articles there for free because I believe in what Gerald's doing over there. Subscribe to the Trends Journal. Okay, he charges some ridiculous fee per year. It doesn't even cover his expenses. So, support the guy. Subscribe to the Trends Journal, okay? Honestly, people, you got to pay it forward. People are going out of their way here to make it easy for you to understand and navigate the twisted freak show that we are in. I think we should support that, don't you? Anyway, so subscribe to the Trends Journal, all right? Anyway, with that said, so we were talking about all this earlier today. I hope you catch this interview. I don't know when it's coming out. But we were talking about the possibility of the Fed pulling a Volcker, like just a gigantic hike in rates like overnight. I think the possibility of that is very low, very, very, very low, because understand what that would literally be a trigger to set a set of wheels in motion that'll change the financial landscape of the world, and it's going to happen. But I don't think it's going to happen via some kind of Volcker thing. I think it's going to happen sincerely because the debt is a hyper bubble, and that bubble is going to burst at one point. And I think it's going to be at a time of their choosing. You all know that. And it's just so simple to understand, in my view, how this is going to play out moving forward and why you need exposure to things like commodities, especially. We talked about that too. Once that interview does come out, I will place a link to it, and I'll send it out to all of you who subscribe to my free newsletter. Link in the description of this video. Anyway, all right, people, look, you got a handle on what's going on. I want to hear from you. What do you think about the billions and billions, and now it's going to be 15 billion that we've thrown at this war, supporting the propagation of war over there, and they're just prolonging it just to play this game. Nothing is what it seems to be over there either, people. Again, war, the propagation of war generates more money for corporations, for the corporate agenda, than any other endeavor, bar none, period, the end. We propped up big pharma to windfall profits on the back of COVID. So now what's happening is all these other corporations that support the war machine and everything else, of course, well, it's not now they want their turn and they're getting it. You think that's by accident too? Really? Tell me you know it's not. All right, look. So with that said, I think I covered a lot here. I want to hear from you. The stuff I covered here, I'm just making sure. Oh yeah, I missed one big thing. Look at this. Epic. How many of you remember this guy explaining to you that the banks were going to be writing off billions of dollars on the back of exposure to Russian debt? Well, that has finally materialized. U.S. banks are going to write off at least $15 billion in Russian assets. Imagine my shock there, people. You can't imagine my shock. You knew it was going to happen. I told you it was going to happen. No brainer here. And that's just the beginning. You think that's all they're exposed to? Is this $15 billion that they're going to write off? No. It's way more than that, and all of it is just going to go bye-bye. Okay? This liability will not be carried on the back of any institution because it's a crisis and it's a war, and we must do everything we can. In fact, look, you have no say-so. Think about this. You must support the war. You must support us sending billions, tens of billions already, over there. You have to support it. Because it's a crisis, it's an emergency, and you have no say-so at all. It's going to happen whether you like it or not. You feel free? Really? You really do, huh? No. You're a slave. We're all slaves. And we have no freaking choice. Anyway, I'm out of here. This guy here loves you a lot. I mean it. Please share the video. I'll see you tomorrow.